If you had the money, would you buy your own business? And if the answer is no, you need to listen to the conversation Lynn and I are about to have.
Welcome to Transforming the Trades, the podcast where we empower you to take charge and innovate your business. Whether you're a plumber, electrician, or any other trade professional, this show is designed to give you the tools and strategies you need to succeed. Sit back, grab a cup of coffee, and get ready to take your business to the next level with Transforming the Trades. Hey, Brian.
Hey, Lynn.
Thanks for being in our series of inaugural podcasts.
Love it.
I am honored that you decided that you could come in and be part of this today. And I really wanted you to come on and be a guest because I feel like you have a very unique perspective on what I'm trying to get out into the marketplace, the community that you and I spend so much time with, which is about where are we going? What's going to transform us from where we are to where we will be in 3 years, 5 years? And I want you to share with our audience who you are, what you do. But I believe your experience is different than so many others. And you are kind of a unicorn.
Well, thank you.
So we'd like to hear from that today. So I'm going to let you go ahead. Why don't you introduce yourself?
Absolutely. Well, thank you for having me. You and I have a long-standing relationship. Yes. We know probably most of the same people. My name is Brian Cohen. The company I work for is SF&P Advisors. So SF&P Advisors was founded 20 plus years ago by Fred Silberstein, our president and CEO, who's a CPA. So Fred had worked with Blue Dot and went through a round of consolidations in the late 90s. And Fred wanted to know kind of where his next step was within the company. And I think it was the current CFO said, well, I'm not going anywhere. So Fred had to make some decisions. He had really become an incredible evaluator of these businesses and kind of went out on his own and did some independent work. So Blue Dot, I think, was one of his clients. And then he started getting help. Some of these PE groups were calling him to help value some assets as well. And that was, late 90s, early 2000s. And then he hung his shingle and became SF&P Advisors. So I started in with Fred, I think, at the end of 2016, beginning of 2017, right as he was closing Dave Geiger's deal, which at that particular point in time was, reset everything that's going on in our space. Like that was the biggest deal with one of the biggest players, and everybody loves Dave, like a sweetheart of a guy, right? Gives away information and advice for free, wants to grow his business and wants everybody else to succeed. That was a really big deal. So that one followed by Ken Goodrich's deal, which was the second big one that happened a little bit later that year. And I had started right when all of that happened. So for me, listen, for the first time in my life, I think the timing actually worked out. Right?
I mean, so nothing like walking in the door with a really cool thing going on, right?
Yes. And I was able to turn around and say, hey, by the way, do you know these two? We just did their deal. Let's have a conversation. And we started having a whole lot of conversations, right? And one thing led into another, and then you have COVID and everybody got crazy and a lot of deals happened. So in the last 3 years, we've probably done north of 110 to 115 transactions, where we normally used to do 12 to 15 a year. So that's how crazy the space has gotten. So the question you ask, it sounded like you said, Brian, let's look into your crystal ball together so we can predict out.
That's exactly what I said. Get your crystal ball out and let's talk about what we see. Yeah.
I don't think consolidation ever stops. Everybody thinks it's, there are so many companies. To put it in perspective for you, I think between Phoenix and Scottsdale, there are almost 3,500 licensed HVAC contractors.
Wow.
Like you can never stop doing deals in that area, right? There's always somebody who's there. There's more work than they know what to do with out there. So just to kind of put it in perspective. So give you another example. We were doing a transaction for a company in the Northeast, right? And again, the population density is pretty thick. And one of the buyers had asked, well, how deeply have you penetrated this market? I mean, you've been here for however long you've been here for, right? And he said, I don't even think 1%. I guess so when you look at the big picture, I think that this continues to move on. And again, a lot of the larger companies have gotten transactions done, right? When I say larger, I'm talking probably north of maybe $2.5 million of EBITDA, right? They've gotten their deals done. And good for them. They got paid. They're going to get their potential second bite of the apple, the equity roll, and all the other stuff. But I think where the next level of this goes, right? And this gets talked about quite often, by the way. Somebody's going to go public. somebody's going to go to the market and say, okay, we've got this big business and now it's time for a next level payday. And you may see a couple of these larger PE groups come together and take something very large to market. And that will reset things again. But it hasn't happened yet. It's been talked about. I haven't seen any movement forward on it. But to think that it would not happen, I think would be foolish.
What would it take to make that happen?
A lot of money, a lot of time. It's expensive.
Yeah.
Go into see, as it currently sits, right? If you're a private equity firm, right, you raise private funds. You have a investor accreditation questionnaire, whatever, right? You got to be about a certain age, make a certain amount of money. The money comes in. This is what this looks like. And they take the money and they invest it into companies. And when you're investing into a PE fund, you want to see what the other funds have done. Do these guys have their act together? How many successful exits have they had? Because that's where you make your money, is on the exit, right?
Right.
And it's easier to do, and you don't have to talk to anybody about it. You're going to file your taxes and your normal stuff, but it's accredited investors, right? When you go to the private markets, you have to disclose everything, like every quarter. It is expensive. It is a staff of attorneys that are constantly filing. I don't know if they're SB10s, don't hold me to the coding, but then years ago, there was a Sarbanes-Oxley Act, which again, I'm not an attorney, but which got after the .com, stuff. It got a little nerve-wracking to do this because everybody was trying to do it and become billionaires overnight. But I think you're going to see that. It's just an expensive undertaking. So who is going to foot the bill for that? Which PE group is going to step up with the attorneys to go ahead and make that happen? Or who on the outside says, hey, we can figure out how to fund this to take it to the next place? And it could be very interesting at that point in time.
So I just learned that a PE group sold to Ace Hardware. Mm-hmm. So I thought that was very interesting.
Ace is another buyer who, they've looked at some of our, potential transactions. I don't believe to date we've completed anything with them, and I can't tell you how far down the path that they've gone with anything, but they've looked at some deals. Yeah,
I thought that was very telling in a lot of ways.
It's a great, right? If a player like that is coming in, realize these businesses are also looking for other ways to make money too, right? You take a look at Home Depot, they figured out how to monetize everything.
Right.
Everything.
Right.
I don't think Ace does it to their level, so maybe this is Ace's play, right? Is to get involved in this space to that level. It's could be very cool.
So when we talk about the community, the contractors that we have today, why is this message important about the marketplace, about the buyer and the seller market, the private equity players? Why is that important? If I'm ABC Plumbing in Orlando and I've got 5 trucks, why do I care?
As more consolidation happens in your area and more people sell, they're getting economies of scale that you don't have. As a smaller contractor that has the ability to pivot very quickly, right, and maybe doesn't need to charge the top end of the range of what they could get in a particular area because they don't have the same overhead. But at the same time, you've got big guys that are more efficient, right, that they get,
more money,
incredible price breaks,
right,
that have a better sales system. So, where do you want to be? I know plenty of guys that want to be small because they're okay being small, because the reality is you're most profitable like between 3.5 and 4 million. As soon as you have to bring in the sales manager, the general manager, and pay that salary, I don't want to say you become everybody else, but you have an overhead. You have some standard overheads that are going to hit you every 2 weeks.
But is there like a small fish in a big sea scenario here? So am I a goldfish and there's a lot of whales around me that's going to eat me up? Is that?
Could. So you got to make a decision. What do you want to do? Like, again, some guys are small on purpose. Some guys are small because they don't know how to get bigger. Like, what are you? Right? Once you know what you are, then you can start making some decisions in which direction you want to go, right?
I get that you don't know what you don't know, right? So you are out there trying to figure it out. And my takeaway on it is that if that's what the market's driving, something's driving it beyond the fact that it's PEs. Consumers have got to have a play here in this space. They're looking for stability. They're looking for trusted branding. They're looking for trusted services, that sort of thing.
Sure.
And so I believe there's a message in that. And so where I'm at is that if I'm a $3 to $5 million company, I got to figure out how to play and compete against that.
Agree on one side and disagree on the other side. Yes, you do. So bigger isn't always better.
Right.
Right. Sometimes a guy that has a business that's doing between 3 and 5, He's got great people working for him. They've been with him for, 10, 15, 20 years. They don't want to go anywhere. Everybody's happy. Why do you want to change that? If it's throwing off a certain amount of cash flow and the owner doesn't have to be there every day and he's built a business where he could travel and do his stuff because his guys are seasoned, he doesn't have to babysit them, why would he want to go to 10 million?
Right.
Right? Because when you grow, you're going to bring in other people that change culture, right? Every person that comes in, you got to conform them to your culture. Like, growing isn't always the easiest thing to do. And what are you growing for? Just the sake of growing? Like, you still have to be profitable. And once you kind of crest over 5 million, there's a new set of overhead that comes into play. You know what I mean? And again, as you get bigger, a lot of these smaller businesses, they grow or they are successful sometimes based upon the owner's personality and strength of will and strength of character too, right? Their emotion plays a lot into it. And when you get bigger, you have to have certain systems in place. And some of these guys maybe don't want to put the systems in place, right? And they don't want to make everybody accountable. Maybe they got mature guys who are going to show up every day, get the job done. They know what they have to charge. They know where they can make more, where they have to make less, or where unfortunately have to make less. But it's consistent. I mean, there is something to be said for the consistency where every day you're not waking up pissing on fires because you've got a decently managed business.
So in the consolidation, the investment play that's resulted as from of the bigger players in the PE groups that are investing and even thinking about the bigger, who's going to go public type thing. How do you feel that has changed the services, the products, the employees that work and that are sold through these companies? How do you feel that has changed?
Well, everybody gets measured now. Everybody gets measured now. So one of the things, so it's interesting you say that, right? So one of the fears when we do a deal is the owner says, well, when everybody finds out, they're going to leave. Right?
Yeah.
Well, first off, everybody thinks everybody's for sale anyhow.
Yeah.
And my response is, the person that leaves after your transaction is the person you should have fired before anyhow, because they know that they're going to be accountable to certain standards and certain numbers, because you're dealing with a PE firm now that manages numbers. Like, you got to produce and perform, right? Because that's how they're figuring out how everybody's going to go make the next level of money. Your very good employees, your motivated ones, say, there's nothing but opportunity in front of me now. We're latched up with a bigger group. I don't have to worry about the owner freaking out or not being able to make payroll, or a lot of times you do these deals for growth and to protect your people. If you really care about your people, so one of the things I say is, we've been in this economic weird spot, right? So if you think the market is going to continue to go down, then you should have done a deal already. I'm serious. Why don't you write it out on somebody else's checkbook? Why would you write it out on yours? What did you do during 2009 to 2012? Remember how fun that was?
Right.
If you think we're heading into that or we're in that now, then get a deal done. Why would you want to stress out unless you just, love to punish yourself?
Yeah.
But for employees, I think it gets better. So you take a look at all of the technology that's coming into our space to make things better and potentially easier, right? You got to figure out how to be able to take advantage of all that. So if you can be training your employees, listen, we're at a Service Titan event, right? And they're talking about AI and all these other great things that can happen. Wow, does that not make your people better? You make you more efficient, right? Honestly, don't have to work as hard, but here's a lot of information that you could put a lot of things together with.
I think it's fair to say, and I've been in this longer than you have, different perspective on this is that now you're really validating this industry versus that you're just a small local business, mom and pop store. And there's a whole phenomenon around that. In fact, when Home Depot started, you probably weren't even born, but when Home Depot was started, everybody was for sure they were going to go out of business. Home Depot was going to put everybody out of business. By the way, the hardware stores were one of those suspects. Ace, HWI, there was one that was Service Star at the time. And all Home Depot did was just create a better demand. And also
pricing.
And pricing.
Yeah.
Along with it actually enabled them to grow.
There's that saying, a rising tide lifts all ships.
Right.
So what I see in our space is there are certain owners that are very aggressive, right? And they charge at the upper end of the range. And when they show up in a market, right, people get a little nervous. They should be sending thank you notes because they just raised the price that everybody can charge now.
Right.
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 And everybody does it. And they all make more money when that happens.
And that's what you're basically saying is that this again, I think it's validated it. It's paved the way. We're standing on the shoulders of those folks that did the hard work to get it to where it's at. Sure. Honestly, if we had a group go public, I think it would be an amazing opportunity for the industry as a whole, as well as the consumers that they serve.
Agreed.
For the reasons that you stated, it's all about accountability, it's systemizing, it's operationalizing, it's creating efficiencies, and it's actually, again, and I'll say the trades, they're having struggle, they're struggling hiring people. Now you all of a sudden have an opportunity to recruit people with a more, less risk. Most tradespeople I know that have left because they don't want the risk.
Well, and you can put a pot of gold in front of them potentially, right? Hey, right. You get vested shares, and this is what this looks like, and we're with your company for a certain period of time. Like, I don't want to say that you're a real company, but when you think about, people that go into these quote unquote white collar positions where here's an offer and here's what a 401k match looks like, and then you get these vested shares, like a J&J type of thing. That brought that to the trade. So to that end, yes, I think you'll bring a different caliber person in, or the people that are here will say, there is a really big opportunity here. And maybe they don't necessarily need to go out and go open their own business. They could stay with somebody for a longer period of time, right?
Correct. Which
builds more value into the business. And the longer you're there, here's more shares. So whatever that looks like. So if I'm not mistaken, on the mechanical side, there are some companies that have gone public. You have Comfort Systems, I think, that's gone public. And I think, there's another one somewhere on the East Coast. I can't think of them off the top of my head. I think EMCOR is another one. Right, and then I think Limbaugh out of Pittsburgh. I think they potentially might be another one. I know they're huge. I know Comfort Systems has done for sure.
Yeah, Comfort Systems.
But yeah, I agree. But it's expensive. But okay. But now you're there, and you're right. I think in that scenario, everybody becomes better because of that. Here's another potential option for an exit from PE instead of moving these businesses back and forth, right? And now, I don't know, it's just another kind of goal to be able to shoot for.
Yeah, we were just talking at lunch, and we're talking about the entrepreneur gene that it seems like some people have, some people don't. Mm-hmm. By the way, if everybody did, then we'd all be doing it, right? But I worked 12 years at IBM, and even though that was for a large corporation, I was still very entrepreneurial because I was given the privilege, I think, to run a whole sales channel. Mm-hmm. And I had accountability. It was about accountability. I had to deliver, but I got paid handsomely to do that. The thing that was similar to being an entrepreneur, they didn't bug me. They just made me accountable. Sure. And that was the difference of maybe starting something similar to that versus working for a very large corporation who fulfilled me, my individual, right, aspirations of being an entrepreneur. And I was part of, 350,000 other people.
Well, think about this. When they make you accountable to certain numbers and certain standards and you achieve them, oftentimes there comes a nice check that comes along with that too.
That's correct.
Right.
Right. That's correct. That is correct.
Yeah, but in our space, again, HVAC is cyclical. Right. So some of it's weather driven, but you look at some of the best companies, they figured out how to still be successful regardless of what the weather is doing. Right. So there's just so many things. And when you take a look at some of these most successful businesses and you look at some of their characteristics, to your point, they have an entrepreneurial mindset, their employees do. They're always thinking, what else could I do for the business? Right. There's this saying, if I have to tell you to pick up the brick to help build the house, you're not the person I should be building it with.
That's right.
Do you know what I mean? I think that's how the saying goes. But if you have created that right culture and your people are incentivized properly and they are looking at your business as if it's their business, right? So I heard this before, and I was at one of these events. We always pick up these nuggets, right? And somebody said, how many are you in business for yourself? And not a lot of people in the seminar raised their hands and said, no, you're all in business for yourselves because your employer is your biggest client. Treat them like that. You don't want to lose that client, right? And if you shift the mindset to that, what do you get accomplished, right? It's like you're taking on ownership for a lot of things. So I don't know how much more money to make. Do you figure out ways to drive more revenue? Or are you coming up with better referral programs? Are you bringing your game every day to keep the culture up? Are you one of those people that when you walk in, you lift all the times? Like, can you imagine if you had a whole team of people that were like that? How much better would you do? And again, a lot of it really does come down to culture, right? When we sell these businesses and we're sitting having these conversations, like you get an idea from the owner kind of what they're about? Are they looking at their phone nonstop? Because we've sat in meetings where a phone doesn't ring at all. And you're like, wow, that's pretty interesting. They got a pretty big business. How does that happen? Right? Because he's empowered all of his people to make decisions, right? And we've sat in meetings where the phone doesn't stop. And you realize, okay, this business needs the owner to be there, right?
Right.
And it's two different businesses.
Right.
You know?
Right.
Not good or bad. I'm just, two different scenarios. Like as an owner, which one would you rather have?
Right.
Some people love the drama. They love that they have to piss on a fire every day to make things happen. And some want none of that,
Well, so what's your opinion and what's your thoughts around the whole economic downturn conversations that we're hearing?
Sure. So let's look at it. So we had basically 0% interest before, a lot of low-hanging fruit during COVID. Everybody said, the hell with it. If it's 0% and I can get financed pretty easily, let's go replace. The replacements are off now, right? Interest rates are up, right? Which means not only does the consumer have to pay more, but I'm sure the discount you have to pay the finance company grew too, which means you have to charge more money in order to make the same thing you were making from before. And you don't have as many of those, right, replacements as you did from before. So you better get good at service.
So that's the shift.
You got to get good at it.
That's my view, but I just wanted to see if you had the same view.
Yeah, and maybe you have to come up with some other avenues to generate revenue within your business, whatever that looks like, right? I don't have the answer for that, but what I have been saying is, and again, you had a soft first and second quarter, right? So the numbers were flat to down, and some people got really beaten up. But again, there's some of them that kicked ass and grew. Well, what is a guy kicking ass and growing? What are they doing? What culture do they have there? Like, we get it. It's going to get hot in Arizona in the summer. It's going to get hot in Florida. It's going to get hot in these places. You got to be able to make it happen when it doesn't get hot. So how are you teaching your people to say it doesn't matter what's going on outside, right? We need to perform every day. What does that look like? And that starts with owners. It starts with leadership and moves its way down to the people. So if it becomes an excuse up top, then it's an excuse for everybody else. But when you ask, what is all this going to do? Well, multiples have shifted, right? Because capital is more expensive for private equity. So if it costs them more to borrow the money, they can't give you as much, right? So maybe somebody was getting it, and by the way, don't hold me to this, just roughing out some numbers. So maybe a guy was getting a 10X last year is not getting a 10X offer this year, right? How far off is it? Depends on the business, so on and so forth, but it is not going to be the 10 like it was from before. And then what comes up is, well, no problem. We'll just wait till next year when it comes back. I said, well, you tell me the last time these 10X numbers were being thrown around willy-nilly like this. You tell me ever in the history of our space. And the answer is, well, never. I said, so you're waiting for the once-in-a-lifetime event is going to happen again next year, right? Let's really figure this out. But that's where this gets interesting. So our sellers are in a couple different pots. The ones we love doing deals with the most are they're in business. It's business for them, right? They know what they can get on a multiple. They understand maybe they lose a little bit today as compared to where it was last year. However, if the marketplace continues to go down, they have a safe haven because they got a private equity partner now with their checkbook, right? Instead of the personal checkbook of the owners. And if it goes down, so what? They got paid today. And big deal. These PE groups aren't going to let these guys fail. So instead of the flip coming in 3 years, it happens in 4 years or 5 years. They got to ride it out a little bit longer. So be it. But at the same time, if the economy goes down and they got paid today, they got a war chest. Everything goes on sale. Property goes on sale. You tell me what else goes on sale. And now you get the ability to write checks for it. You'll make that much more money out of it. That's how a business person looks at it.
Actually, the PEs are going to win in this, to be honest. Sure. It's like the 2008, 2009 downturn in the housing market, right? So it's exactly the same scenario.
It is, yeah, except the difference is I think this time around is that the interest rates were so low for these folks that they're setting these very low interests and they can afford to pay them. But that's on the housing side. That's probably a whole other
Well,
yes.
It was kind of more along the lines of what happened. So they bought low, and now, of course, they're making
when's the best time? Money is made during recessions and depressions, not during bull markets.
That is correct.
Ken Goodrich actually said something very interesting at an event. And he's like, listen, when the market's going up and everybody's kicking ass, everybody's a genius. Real genius isn't during these times. Real genius is when things are going against you and you keep figuring out how to win. And he was right with what he said. But again, if you haven't done a deal and you wait till next year, and the guy that was getting a 10 last year that's maybe getting, we'll say, less than a 9 this year, where is he at next year? In a 7? You want to hang yourself next year if it's a 7, you didn't get a deal done, right? And if the marketplace goes up and you did your deal this year, so what? You've got an equity roll, so your stock grew on the other side. Big whoop, you got the hedge. Really, the only way you get hurt is not doing a deal and the marketplace goes down. So then the bigger question is, what's happening next year going into an election year?
But your guess is as good as mine on that one. But
So you take a look at it, right?
usually an election year is a down year.
So if it's an election year and there's, we'll call it political headwinds for another, again, not to get political, but Democrats seem to be less pro-business than Republicans. And let's say it's a Democrat situation that want to keep playing games with the interest rates and give away a lot of stuff, like which goes on. I think you're going to see a lot of people that are saying, I'm not going to sit around like this for 4 more years. And you're going to see a lot of people that are going to go to market. So you're going to get a surplus of deals at market, which doesn't really help anybody. You might lower the multiples again, right? Again, if the headwinds are, hey, we got a business guy, person who's going to come in to run the country, I think things stabilize and they sit the way they are for a couple of years.
We shall see.
Right.
We shall see.
Well, here's my crystal ball. I gave you
That was your crystal ball.
all the different looks.
Yeah. So Brian, talk to me about when you were talking about the assessment of the value of a company, and you included this thought that culture was part of the equation.
Sure.
So help the audience understand what that means today, and then what would you think about that being a factor in the future as part of this whole where we're going to be in a year, 2 years, 3 years. So what needs to be improved, stabilized, emphasized, if you will, about culture in their business, and how important is that in a decision from a private equity company or a buyer?
Sure. So when you have like 2 different types of businesses, right? One where there's systems in place. And the question I always ask an owner is this: if you want to get an idea, right, and I think culture is part of this, and I'll get there with you in a moment. Just let me go through this with you. When I ask an owner, how long can you be away from your business and it continues to perform? Whatever the definition of perform is, right? Is it a week? Is it a month? Is it many months? What's that look like? The longer they can be away from their business, chances are the culture is better, right? Because they have instilled empowerment. Their people are empowered to be able to make decisions. The owner has instilled, hey, here's how I like things to be done, and everybody kind of adheres to that standard. Thus, he can be away from his business, right? On the flip side, you have an owner that has to make every decision. Everything has to go through them, right? And at that point in time, the employees are afraid to make the wrong decision, because the wrong decision, they're going to get ridiculed by the owner. I'm generalizing, by the way. I don't say this happens all the time, but you get stereotyping what I'm saying.
No, I understand.
So when you look at that, you just off of what the 2 characteristics I gave, which one do you think has a better culture?
Oh, by all means, the one that is empowered.
But culture is also when you walk in the door, right? If I'm an employee, right? Again, your clients aren't just the people you're selling a system to. They're also your employees. When your employees walk in, right, do they feel proud to be in this space? Look how gorgeous this is. I can't wait to show my family and friends where I work, what goes on. Am I respected, at my office? Or do I have an employee appreciation? Is there something, or birthdays being announced? Do we feel like this is a team? Because it's hard to leave a family, right? So if you created that culture of a family atmosphere where we take care of each other, we have each other's back, everybody's empowered, they're structured out properly, and they have, a really nice an opportunity to go high financially and within their career, God, then it's an investment they're making back into the business. Like, why would they leave if they've been there for a number of years? Obviously, that there's a path for them to go do some greatness or go achieve some great things if that's what they want to. There's no right or wrong. Like, there's businesses where the owner's involved a lot and they're huge, and that's fine. I'm just giving the differences of these 2 types of businesses. But when you think about culture, I mean, you take a look down to the employee level. Are they enthusiastic to be there, to go to work, to go make something happen every day? Like, have you figured out a way to hit that switch? An employee shows up and they're like, boom, okay, I'm going to get challenged, and that's okay. That's what I'm looking for, and I'm going to have some fun, and and I'm going to be pissed at times. I'm going to love it and hate it. I think that's kind of like the chemistry you need, like, to keep everybody's juices going, to get excited about what you're doing. Yeah, right.
Yeah. You don't love each other all the time.
No, of course not.
And you don't hate each other all the time. And you certainly want to punch each other in the nose occasionally. So, yeah, that's absolutely true.
But if you don't have that culture down as you grow, eventually it fragments off, right?
Sure.
So when PE comes in, there's a certain type of culture that they're looking for. And, a lot of it comes through the conversations they have with the owner.
Gotcha. Oh, thank you for that.
Sure.
So I want you to come back.
Okay.
I want to touch base again. Thank you for sharing your words of wisdom today. I think it's a different
You're very
perspective.
welcome.
At the end of the day, most of my clients, at least, even if they're not thinking about selling today, they're thinking about when I do sell, or what's going to happen in 5 years, 10 years. And that's why I feel like this conversation is so relevant to how we will transform. All the years I've been in this business, since 2016, when you got into it, if you will, this heightened interest about how to sell, that was a strange time.
I mean, listen, and you got Facebook, and everybody's spouting off about the multiples, and everybody knows So I'll tell you something funny. We talked about this I talked about this earlier. I used to show up at these events, and nobody would come to my booth because nobody wanted to be seen around the guy that sells the businesses because the reputation would get out that, hey, they're selling, because nobody understood what selling really was. Now, people hang out.
They want to figure it out.
They want to hang out. They want to have conversations like they're realizing that they are, learning that they have to get some questions answered so they understand it. Like it's being seen from a different perspective.
Exactly. It's definitely part of the mindset that is the business owner today.
Agreed. And the other thing, which is interesting too, and you get this because you're on the financial side of this. A different sized businesses have to make different decisions. The decisions a $5 million guy makes is different than the decisions a $15 million guy makes. The problem is not always does the $5 million guy and $15 million guy know their worth 5 and 15. So they're making
most of them don't.
Right. So
most of them don't.
Our rub has been for a very long time. How are you making certain decisions in your business if you don't know really how big you are? Right. To think that you got a $15 million business that doesn't have a CFO. Right. That there's some decisions that need to be made. You're still thinking with a $5 million mindset.
Or at least a controller.
Right. At least. Right. Yes. Exactly.
Yeah.
Somebody who understands the numbers.
Right.
They can sit down with the owner, explain to him what these different things actually truly mean, and how to lean on certain parts of the business to be able to, maximize what profit is. Ultimately, I think that's what they all want to do anyhow. Right. It's like to put it in a different perspective. Right. If you were going to remodel your bathroom, right, and let's say at a $500,000 house, right, how much are you spending on the remodel of your bathroom
today?
Yeah.
Probably $50,000.
Right. You wouldn't spend $200,000.
I wouldn't, but some people would.
Well, you wouldn't. Wait, I'm just saying, like you wouldn't spend $200,000 on remodeling a bathroom of a $500,000 house.
No.
You'd spend $200,000 remodeling a bathroom on a $3 or $4 million house,
Correct.
possibly. But my point is, we understand that on a home. Mm-hmm. Oh, yeah, you would make that. Of course, that makes sense. But not to understand it on your business. Mm-hmm. Mm-hmm.
So how can our listeners get a hold of you?
Call me.
Call you. Call Brian, SF&P.
954-226-3409. That's my cell number.
There he is.
Shoot me a text. We'll have a conversation. I'll give you an idea where your business is at. It'll help shape some of the decisions that you're making.
You bring up a really good point, and I know this is how you guys operate. It doesn't hurt to go talk to you all. Understand what's going on. Have a heartbeat on this. Understand it. You don't have to sell today, but you need to think about where you're going and what's driving those movements. So I think that's where you all become a very valuable resource.
Well, I appreciate that. And again, one last thing, because what's funny is we get a phone call. All right, I'm ready to sell. I said, I've been talking to you for 2 years. We could have put numbers together 2 years and helped you over a course of 2 years to get you where you want to go. Now you drop your stuff on me because now you woke up and you're ready to go. And here I am going through your numbers and I got problems. And I can't get something done in 4 to 6 months. I need a longer runway because I have to wait for certain things to work themselves out. So to your point, there's never a bad time to call. You can never call me too early. You really can only call too late. So why not give me a call? Let's have a conversation.
Sounds good. Thanks, Brian.
You're awesome. Thank you.
You're awesome too. Thank you for tuning in to Transforming the Trades. We hope you enjoyed today's episode and gained some valuable insights and tips for your trade business. If you found this podcast helpful, be sure to subscribe and leave us a review on your favorite podcast platform. And don't forget to check out our website where you can find additional resources and information to help you grow your business. Until next time, keep innovating and take charge of your success.